Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, November the 10th, the year 2019. Let's talk trading, weekly open and gap. And as you know, we start the week by reminding ourselves that we must have our risk management and money management in place on each and every trade so we do not lose more on any one particular trade than we're willing to lose on any one particular trade. And remember, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And that when you engage in trading, you are engaging in something that's very, very risky. You can lose all your money. So if you need advice, seek it from an accredited financial professional. That way, when you lose your money or they lose your money, you know you took advice and guidance from an accredited financial professional rather than by somebody you stumbled across on the internet on some trading forum or video. Okay, the gaps. We still have a couple that haven't filled here. Actually, there's three. So if you're late to the party, you may still have a chance to get in on some gap fills. One of them being the pound dollar. As you can see here so far this week, the dollar yen dipped inside the upper wick zone of the previous week and then exited to the south side. And we're 14 pips below today's open. For the year, we're only 59 pips below the yearly open. And this should be really interesting because it looks like we're going to have the opening day range for the week here. It's going to be inside the opening day range for the first day of the year. So that should prove interesting what happens this week. Haven't seen that, I don't think, all year. Looking at the weekly chart here, well, actually, we've got it set up with the weekly buy zone, so you can see what price has done so far. It went up into the buy zone range, turned around, shot through that open, and now is exited to the south of the sell zone range. And we had an inside bar yesterday, and so far we broke out of that inside bar for 2 pips. And you can see there's a lot of inside bar action on the daily, and there's some on the weekly too. And there's even a few more on the monthly. So for inside bar traders, you might want to be prepared. No ranges here to talk of. It's still, that first trading day. We haven't quite gotten to the London Open yet. Even though I'm coming to you later in the day, you can see we still have over 18 hours left in the day. And price opened in the previous day's lower wick zone, went up, and came right back down and through it and exited the bottom. So once again, there was a trader out there that was asking me, how many times do you trade it? When do you trade it? How do we filter trades? Well, you trade it each and every time you can. You don't filter trades because price is going to enter and exit that wick zone. It's pretty much going to happen more times than not. For the weekly highest opens, H1 highest open right there so far for the week. There's your monthly daily highest open right here, and the monthly H1 highest opens way up here. Pivot point, looks like we missed the pivot. Really wasn't much. We opened below, so we were looking, we gapped down, so we were looking to go long, but really wasn't much of a gap down right there. And the pivot was above, so that's 2 reasons to go long. But the pivot being inside the buy zone means it really wasn't that strong of a bias, and price failed to hit it and then turned right around. rat zone. Too early in the day for the rat zone. And here we missed the pivot today. Weekly pivot 108.95. It might hit it. So far, there hasn't been too many weekly pivots that have been missed this year. You can see here on the daily, so far this pivot's missed. We got a couple more, but so far 3 this month, and still one needs to be hit at 107.66 from last month. That's this one down here. But once again, we don't know if it's going to hit it, but we just know how often that it does. Price action. Once again, we spoke about things last week on the first principles, and we'll continue that. I will continue talking about some of those this week, but price just ranges. It's not going to stay between these two lines, not for long. Maybe a few hours, but sooner or later it's popping out. And here, just once again showing the wick zones. Started on the inside, went to the outside, came back to the inside, and went back outside. Just simple horizontal line cross trade there. Nothing to get excited about. Just it happens every day. You take a few pips and you're happy. Einstein line. You can see here when I open the trading profile, there was a long trigger and there was a few pips to be had. Actually, about 1 pip to be had. Not that much so far. You can see not much action at the tick level. Still early in the week, early in the trading day. But as far as, once again, trading off of ATR ranges, there's the daily open. There's the daily open minus half of the ATR2, which was the minimum, and price came down and touched it. So, I mean, that's only 16 pips, but for those of you who like to collect 10 pips and be done with it for the day, there was a nice trade there. We're just looking to hit the half of the ATR, because when you think about it, from the open, one way or the other, it almost has to hit half of the ATR. The ATR being the average true range, range being high minus low. So if you think about it, if you've got an average range and you take half of it, you put half on the top side, half on the bottom, well, there's your range. So if price shifts, if it doesn't hit one, it almost has to hit the other when you think about it on a statistic basis. So once again, just knowing these statistics, these frequency distributions, you can kind of stack things in your favor. So when you place the trade, you place your stop loss, and then you take your chances. What's the worst thing that can happen? You get stopped out and you lose the amount you're willing to lose. So that way you don't have to really think about this stuff too much. I mean, there's some traders out there, I don't know, I keep seeing these things come in my email, these different indicators, all these squiggly lines, these dashboards that look like a space shuttle cockpit. I mean, how can you read anything off of them? And they're not really that customizable either. So I just hope you guys don't get caught up in any of that nonsense. I mean, you can take a simple indicator here like the multimeter, see what the candle colors are at a quick glance, and you can pretty much know which way to trade based on candle color alone. Or if you're using some type of other entry trigger, and say you were wanting to go long and you see everything's red, it might cause you to take a pause and say, maybe things need to start going up, at least from the 1 minute perspective. Even though price is same on all charts, the candle color aren't going to be the same. And here, once again, just looking at the different H1 bars, highs and low. It's like one was, okay, we have a euro, We've got a high of the day, this particular bar. So if we come over to the Euro USD, you can see it is making this is H1 bars. Yeah, making a new high. Even though for some strange reason it doesn't look like it's making a new high. Let me take a look at something here. That's right, H4, 0, H1. That is interesting. Let me look at the pound yen, making a new low for the day on this bar. I wonder why it thinks the euro is making a new high on this bar. Doesn't look like it is. Double check one other thing, 1 bar ago. The pound New Zealand. Five bars ago. 0, 1, 2, 3, 4, 5. Yeah. So there might be something interesting about the euro. Might need to refresh chart data since I don't trade that pair that often. Well, that's pretty much it, fellow traders, for the weekly opening gap. Remember, there's 3 pairs out there that still haven't filled the gap. And as you trade this week, just want you to keep one thing in mind here. It's not what you trade, it's how you trade it. So go out there and have a great week of draining the banks.